Hey everyone, welcome back. Today we are tackling Home Depot's third quarter earnings.
Fresh off the press from their November 14th release.
We've got the press release right here
And some analyst notes.
to help us really dig in and see what's going on.
Yeah, cut through the noise and see what it all means.
So, is Home Depot weathering the storm?
What are investors saying?
Let's jump in.
What stands out to me is that Home Depot seems to be following those broader economic trends, but, there's some interesting details here that we'll get into.
Okay, love it. So first up, the headline numbers.
Let's do it.
Total sales, $37.7 billion.
Okay.
That's a 3% dip year over year.
And if we look at comparable sales, which is really that apples-to-apples comparison of store performance, those were down 3.1%.
Not exactly a stellar quarter then.
Not in terms of, pure growth, no.
Yeah.
But we have to remember the context here.
Yeah, for sure.
Rising interest rates, inflation, that economic uncertainty lingers. So seeing a bit of a slowdown in consumer spending, especially on those bigger purchases, isn't really a surprise.
Makes sense. It's all about context. And speaking of context, Home Depot CEO Ted Decker had this to say in their release, and I quote, "Similar to the second quarter, we saw continued customer engagement with smaller projects and experienced pressure in certain big-ticket discretionary categories." So, reading between the lines here, what's that telling us about what's happening?
It's very insightful.
Yeah.
I think what it suggests is that people are still doing those home improvement projects, but they're being much more careful, more selective about those big splurges. Think about it. You might be more willing to, say, repaint a room yourself
Right.
than shell out for a whole kitchen remodel right now, hire a contractor, the whole 9 yards.
Yeah, makes sense. With rates where they are, financing those big projects gets really expensive, and people are probably a little hesitant to take on that debt.
Exactly. And when the economy feels a bit wobbly, people naturally prioritize needs over wants.
Okay, so we're seeing consumer behavior shifting, and those Home Depot numbers are really reflecting that change. So let's bring in some expert analysis here.
Okay.
We've got Kevin McCormick's notes
Yeah.
highlighting both the good and the not so good.
Always good to have both sides.
Right. So on the positive side, we've got the continued growth in digital sales, a strong showing from the pro customer segment, so those contractors and builders, and continued efforts to improve operations.
Yeah.
But then, of course, there are those negatives, like that overall sales decline we've been talking about, pressure on those big ticket items, some margin compression, and a narrowed guidance for the rest of the year. So how do these observations match up with the raw numbers we saw earlier?
I think it really paints a picture of a company trying to adapt. Those positives, like the digital growth and focusing on those pro customers, suggest they're really searching for those new avenues for growth and catering to the segments that are remaining resilient.
Yeah.
But the negatives, they kind of remind us that no one is immune to those broader economic forces at play.
So it's a mixed bag.
I think so, yeah. Some areas of strength, for sure, but definitely some challenges to overcome. What really stood out to you in those initial findings?
Honestly, I'm really curious about this margin compression thing.
Right.
It's mentioned in the analyst notes. But what does that actually mean in practical terms? How does that hit Home Depot's bottom line?
So margin compression means their profit margin on each sale is getting smaller.
Okay.
Think of it this way. Let's say they sell a can of paint for $50. Last year, after all the costs, the paint itself, shipping, storage, staff, all that, they made a $10 profit on that can. So that's a 20% profit margin.
Okay, I'm following.
This year, maybe those costs have gone up because of inflation, but they can't raise the price of that paint too much because customers will just shop somewhere else.
Right.
So now their profit on that same can might be down to $7. That's margin compression. They're making less profit on each sale.
Ah, okay, that makes it much clearer. It's like this silent squeeze on their profits.
It is, and it can have a big impact on those overall earnings, especially if it keeps happening.
Yeah, no wonder investors are watching that closely. Okay, so margin compression, got it. Now let's talk about that elephant in the room, that overall sales decline and the pressure on those big ticket purchases.
All right, so the report shows net earnings of $3.8 billion for the quarter, which comes out to $3.81 per diluted share.
And how does that compare to last year?
It's down from $4.24 per share in the same period last year.
Yeah.
It's a decline, yes, but, not totally unexpected given everything we've been talking about with the economy. And if we look closer, we see a 5.2% decline in transactions over $1,000. That's a pretty big drop, and it really underlines that shift away from those larger purchases.
Wow, 5.2%, that's significant. What do you think is driving that? Is it just interest rates, or is there something else at play?
I think it's a bit of a combination.
Okay.
Higher rates definitely play a role,
Yeah.
but there's also that psychological element. When there's economic uncertainty, people tend to hold off on those major purchases. It's like, let's wait and see what happens before committing to that new kitchen or bathroom.
Right, hitting the pause button on those bigger projects until things feel a bit more stable.
Precisely. And for Home Depot, that has implications because those bigger ticket items often carry higher profit margins.
So it's a double whammy, lower sales volume, and the lower profit margin per sale.
Exactly.
That's rough.
It is, but remember, it's not all doom and gloom. We did talk about those bright spots earlier.
Right, the silver lining.
Exactly. Let's dig into those a little more.
Yes, please.
Yeah.
The pro customer segment was highlighted as a strength in the analyst notes. Why are the pros doing well when DIYers are maybe pulling back a bit?
You know, that's a great question. It gets to some interesting dynamics in the market.
Okay.
Pros, like your contractors and builders, often have more stable incomes than the average DIYer.
Makes sense.
They're usually working on contracts, which gives them some insulation from those economic swings. Even if someone decides to put off a big renovation, essential repairs and maintenance still need to get done.
That's true.
So that creates a consistent flow of business for pros, which then benefits Home Depot.
So Home Depot focusing on building those relationships with pros, that's a smart move in this climate.
Absolutely. It's a way to diversify their customer base and really tap into that segment that's a little less sensitive to those economic ups and downs. And this is where those operational improvements we mentioned come in. They're streamlining their supply chains, making it easier to order online, offering services specifically for pros.
It sounds like they're trying to make it as easy as possible for pros to do business with them.
Exactly. And that's smart in a competitive market.
Right. So we've got this balancing act happening, big ticket sales down, but pro customers stepping up.
Yeah.
Margin compression squeezing profits, but operational improvements are creating efficiencies. It's like they're walking a tightrope.
That's a great analogy.
Right.
And to make it even more interesting, they've narrowed their guidance for fiscal year 2023.
Right.
They're now projecting sales and comparable sales to decline between 3% and 4% for the full year.
What does that tell us?
Well,
I mean, we've covered a lot of ground already.
we have.
Maybe we should take a moment to let that settle in, and then we'll pick up with that narrowed guidance and what it means in part 2 of our deep dive.
Sounds good to me. Stay tuned, everyone.
Okay, so let's pick back up with that narrowed guidance for fiscal year 2023.
Right. Sales and comparable sales now projected to decline between 3 and 4% for the full year.
It's definitely a sign that they're expecting things to slow down, but what does that mean long term? How can they adapt, maybe even thrive if the economy stays rocky?
That's the question, isn't it? To answer that, I think we need to go beyond just the numbers and look at the bigger forces shaping the market.
Okay, lay it on me. What kind of forces are we talking about?
Well, the housing market is a big one.
Makes sense.
Home Depot's success is really closely tied to how healthy that market is. When people are buying and selling houses, they tend to spend more on, renovations, upgrades, all that.
Right, so if the housing market cools down, that could spell trouble for Home Depot.
It could be a challenge, sure.
Yeah.
But, the housing market is cyclical.
Right.
It goes up, it goes down.
It ebbs and flows.
Exactly. And even when things are slower, there's still a baseline level of demand for those home improvement products and services.
That's true. People still need to maintain their homes, even if they're not, flipping them or upgrading to a bigger place.
Exactly. And that's where their focus on those smaller projects, the ones Ted Decker mentioned, becomes even more important.
Right.
They've got to make sure they're appealing to those customers who are still doing those essential repairs, the maintenance, even if they're holding off on the big renovations for now.
So it's about striking that balance, appealing to both, the dream renovators, the everyday fix-it folks.
You got it.
Okay.
And that balance is going to be key to navigating those potential shifts in the housing market.
For sure. But the housing market isn't the only thing in play here.
Right.
We've got to think about those economic headwinds we keep talking about. How might those affect Home Depot's strategy going forward?
Yeah, if inflation stays high and those interest rates keep climbing, it's going to put a squeeze on everybody, not just Home Depot.
Right, it's a macro trend.
Exactly. If that happens, they're going to need to find ways to really manage those costs effectively. Being smart about pricing, inventory, supply chain efficiency, all of that.
So it's about getting leaner and meaner, basically.
In a way, yes. Yeah.
But it's also about finding those opportunities to add value for customers, even when everyone's watching their wallets a bit more.
Yeah, what do you mean?
Think loyalty programs,
Okay.
personalized offers, maybe expert advice that helps customers make those informed decisions.
So it's not just about cutting costs, it's about giving customers something extra.
Exactly, something that makes them choose Home Depot over the competition.
I like it.
And that's where their investments in those digital platforms, and of course focusing on that pro customer segment, that could really pay off. They can use those platforms to make the shopping experience smoother, more personalized.
Yeah.
And for the pros, give them the tools and resources they need to be successful. Remember, those pros are more likely to keep spending even when the DIYers might be pulling back a little.
So it's about creating a win-win situation for Home Depot and their customers, even when the economy is a bit shaky. You got it. It's about being resilient, adaptable. And that's what investors are going to be watching for, signs that Home Depot is shifting their strategy to meet those changing needs.
Okay, so we've got the housing market, those economic headwinds, some potential strategies, and then the importance of that pro segment.
A lot going on.
It is. What else should investors be looking out for in the next few quarters? What are those key indicators that Home Depot is on the right track?
One thing to keep an eye on is their investment in their workforce.
Okay.
Home Depot is known for having, really good customer service.
Right, that's part of their brand.
It is, and they need to hold on to that even when they're trying to manage costs.
Makes sense.
Think about it. They're employees. They're the face of the company.
Right. Yeah.
They're interacting with those customers every day.
Literally the front lines.
Exactly.
Yeah.
And in retail, that human touch can make all the difference. So investors are going to want to see that Home Depot is investing in training their employees, giving them opportunities to develop and making sure they're paid fairly. Because if the employees are happy, the customers are happy.
It's all connected.
Exactly. And happy customers usually lead to, happy investors.
I like that. Happy employees, happy customers, happy investors.
It's a virtuous cycle.
It is. And it's something that Home Depot has usually done well, right?
They have.
But they'll need to keep making it a priority, especially with all the economic uncertainty.
Absolutely.
Okay, so we've got a lot to think about. Housing market, economy, strategy, and the people.
It's a lot.
It is. What's the key takeaway for investors? What should they be thinking about as they watch Home Depot's journey?
I think the main thing is Home Depot's facing some real challenges, but they're in a good position to overcome them.
Okay.
They have a strong brand, loyal customers, and a history of being innovative. The next few quarters are going to be crucial for seeing how well they can adapt to this changing economic landscape.
It's almost like they're a mirror of the overall economy, wouldn't you say?
That's a great point.
Yeah.
Their story really is like a microcosm of what's happening in the broader economy. They're dealing with inflation, interest rates, the housing market, supply chains, you name it.
It's all there.
It is. And it reminds us that even the biggest, most successful companies aren't immune to these global economic forces.
Right.
And by understanding Home Depot's story, we can get a better grasp of the things that are shaping our world.
That's what I love about these deep dives. We start with one company, but we end up exploring these bigger ideas that connect all of us.
Yeah, absolutely.
Yeah.
It's like that saying, everything is connected. The more we learn about one thing, the more we understand about everything.
Well said. So as we wrap up part 2 here, what's the one thing you want our listeners to take away? What's that nugget of wisdom to help them make sense of it all?
Pay attention to the details.
Okay.
Don't just look at the headlines. Dig a little deeper. Look for those subtle shifts in how people are spending their money, the adjustments companies are making, the economic forces behind it all. The real story is in those details.
It's about seeing the forest and the trees.
Exactly.
Great advice. Okay, well, that brings us to the end of part 2 of our deep dive.
We'll be back for part 3 to wrap things up and leave you with some final food for thought. Don't go anywhere.
Okay, so we're back for the final part of our deep dive into Home Depot's third quarter earnings.
We've gone through the numbers, the context, looked at the challenges and those opportunities.
It's been a journey. So where do we go from here? What's that big takeaway for everyone listening?
As we've seen, Home Depot's in a really dynamic environment.
For sure.
There are those headwinds they're facing, but they're also showing that resilience.
It's that tightrope walk, right?
Yeah.
Balancing those external pressures and their internal strategies.
Exactly. And that's what makes this so interesting to watch. It's like a microcosm of the whole business world, really. Adaptability and being strategic, those are essential.
Absolutely. So what's the big question that investors should be asking as Home Depot's story unfolds? What's the key to their future success?
I think the question is, how will Home Depot change their business model to really thrive in this new era?
Okay.
With changing consumer behavior, all the technology, and the possibility of more economic ups and downs.
Wow, that's a big one.
Hmm.
It covers so many different aspects of how they operate.
It does, and there's no simple answer. But I really believe that's the question that's going to determine Home Depot's success in the years to come.
Mm-hmm.
How are they going to adapt to e-commerce, that demand for convenience?
All right.
How will they use data to personalize that shopping experience, anticipate what customers need?
Yeah.
And how are they going to attract and keep those great employees when everyone's competing for talent?
It's a lot to consider.
It really is. Just a few pieces of the puzzle.
Sounds like the leadership team over there has their work cut out for them.
They do, but they also have that track record of being innovative and a real commitment to customer service. Those are valuable assets in any situation.
Right. It's easy to get caught up in the challenges. But Home Depot has a history of getting through tough times.
They do, and they've shown they're willing to change and evolve. Ultimately, that's what will decide their success.
Okay, so final thought for our listeners. What's the one thing you want them to walk away with?
Never stop learning, never stop questioning, and keep paying attention.
I like it.
The world of business is constantly in motion, and the more we understand those changes, the better we'll be able to navigate them.
That's great advice. So on that note, I think we've reached the end of our deep dive into Home Depot's third quarter earnings.
We covered a lot.
We did, but I hope everyone listening got some real insights from it.
It's been great exploring this with you. And remember, every earnings report is a story waiting to be told. It's up to us to dig in, connect those dots, and find the real meaning behind the numbers.
Thanks for joining us on the deep dive. Until next time, keep exploring.